Exactly. Trucking insurance companies used to be the last adult in the room, the final place where drivers or trucking companies with bad driving and accident records got told no. Today, in large parts of the market, insurance companies don't keep bad drivers or carriers off our highways. Instead, they enable them. And then they step into the shadows when things go wrong. Settle in, my friend, because once we walk you through how this kind of BS happens, it will make a lot more sense to you.
Chapter 1. Trucking insurance was supposed to be the gatekeeper.
There was a time when getting an insurance policy was the last real barrier to becoming a legal trucking business, and it was a serious barrier that really mattered. You could scrape together money to buy a truck, you could file the necessary paperwork with the government, but getting insurance to legally run the highway and to make a dollar was a huge hurdle. Once upon a time, when you applied for trucking insurance, you would have to meet with an agent to go over the details. The insurance agent is someone who understood risk and actually looked at your operation and your driving history. That meeting was supposed to separate real McCoys from the fake fly-by-night operations.
I heard that. In times past, it was the insurance companies that made sure the trucking companies were on the up and up because they actually stood to lose money if something went wrong. They were supposed to ask questions like, who are your drivers? Can we get copies of driver MVRs? Do you have a safety program? How do you drug test your drivers? Are they tested in-house? And finally, what are your protocols when something goes sideways and a driver is involved in an accident?
Exactly. And that's why this matters so much. Insurance companies aren't in business to make trucking safer. They are in business to make money, and they do that by managing risk and charging customers based on their risk level. Think of it this way. If we were talking about life insurance, a 20-year-old has a much lower risk of death than a 70-year-old, meaning the 70-year-old would be required to pay a higher insurance premium on the same policy because their risk of death is much higher at this point in time. The problem is that large parts of the insurance industry decided that fast growth and premium volume mattered more than understanding what or who they were insuring. Once that shift happened, the floodgates opened, and we are now in the middle of a raging storm.
And that collapse didn't happen all at once, did it? This wasn't one bad policy decision or one company going rogue. It sounds like a slow erosion where convenience and speed slowly replaced scrutiny and verification.
That's exactly right. Nobody announced, we're done filtering risk. They just stopped doing the actual audits like they used to. They started overlooking this and overlooking that, one shortcut at a time, until insurance stopped being a filter and became a vending machine.
Chapter 2. What the latest crash data reveals with regard to trucking accidents and where the failures took place.
This lackadaisical attitude of the trucking insurance companies is about to change, because for the first time, someone actually put together a scorecard that tied insurance companies directly to the safety performance of the trucking companies they insure. Not made-up numbers, not fake headlines. Actual FMCSA data that has been compiled with statistics like crashes, fatal crashes, violations, out-of-service rates, prior shutdowns, all rolled together in a neat package to make the evaluation process a heck of a lot simpler.
And that's the critical part. Because people can argue opinions all day long, but when you tally up millions of real insurance trucking company relationships and line them up against real crash data, patterns stop being debatable. At that point, these cause and effect numbers clearly show what has really been going on.
Exactly, and the numbers are not subtle. Out of nearly 3 million insurer-carrier relationships, a tiny fraction, and I am talking way less than 1%, actually accounts for roughly 6% of all crashes, fatalities, and injuries that happen. That's not statistical nonsense. That's verifiable proof of where the concentration of risk lies when it comes to which trucking insurance companies are creating this problem by insuring anyone with a pulse.
This is a small number of insurance companies carrying a disproportionate amount of dangerous trucking company operations under their wing. And that raises the obvious question, what does the underwriting criteria look like for these insurance companies that will insure virtually anyone with a pulse?
That's the right question, because insurance companies aren't supposed to cause crashes, but that is absolutely what is happening. Trucking insurance companies are supposed to prevent bad trucking risks from ever being insured and out on the highways. When more than half of an insurance company's accounts are comprised of high-risk or critical risk indicators that stretch across multiple safety indicators, it becomes painfully obvious that the failure actually happened long before the crash, not after it.
Chapter 3. The new entrants are linked to trucking accidents, yet nobody is talking about it.
This is where I think a lot of viewers get confused. They hear the phrase new entrant and think that term is referring to a small, inexperienced, or maybe just learning the ropes type of trucking company. And it may even sound completely harmless on the surface.
That's true, but here's the problem. A new carrier doesn't have a safety record yet. Their safety score looks spotless and totally clean. However, it's not because they're safe and do things the right way. It's because they haven't existed long enough to screw up and have a record. When insurance companies lean heavily into insuring new entrants, they're not underwriting safety. They're underwriting absence of historical data on these new trucking companies.
So the system rewards being new, not being good. If you've been around long enough to accumulate violations or crashes, you look risky. If you just popped up yesterday, you look spotless, even if the trucking operation behind the scenes is a total mess.
Exactly. And the data shows that a handful of trucking insurance companies dominate this new entrant pipeline. The top 10 account for about half of all new authorities. That's not diversification, and it's not by accident. That's a concentration by design.
Which means when those new carriers start aging into their risk profile, the damage isn't spread evenly. It stacks up in the same places over and over again. And by the time the risk shows up on paper, the crashes have already happened.
And here's the worst part. When those accident-prone trucking companies flame out, they don't disappear. They reincarnate and morph into a brand new trucking company. And that brings us to the next problem.
Chapter 4. What are chameleon trucking companies? What is instant issue insurance? And why does it matter?
Instant issue insurance and chameleon trucking companies are best friends. A carrier causes a catastrophic crash, the insurance limit gets exhausted, lawsuits pile up, and the company shuts its doors. On paper, that looks like accountability. In reality, it's nothing more than a costume change.
Same owner, same trucks, same business model, just a new name and a new DOT number. And because instant issue insurance doesn't verify history deeply, that carrier slides right back onto the road like nothing happened.
That's exactly right. There are real cases where a single truck carrier kills someone, carries only minimum insurance, and then reopens under a new identity weeks later. The family gets pennies, the policy is gone, and the person responsible keeps trucking.
And from the insurance company's perspective, they're technically protected. They wrote the policy, paid the limit, and moved on. But from the public's perspective, justice never even got close to happening.
Chapter 5. Nuclear lawsuit verdicts. And what happens when insurance coverage is lacking?
Now let's talk about what happens when a crash actually goes to court, because this is where the numbers can get mind-boggling. Jury verdicts in trucking cases have exploded over the last decade. We're not talking about a few rare high-dollar verdicts. There has been a systemic shift.
That's right. Average trucking verdicts jumped from a couple $1 million to tens of millions. By 2024, verdicts over $100 million weren't rare anymore. Meanwhile, the federal minimum insurance requirement is still only $750,000, which is a number that was set back in the 1980s.
And that $750,000 insurance coverage isn't per victim, it's per crash. So if multiple people are hurt or killed, that money evaporates instantly. After that, there's nothing left to collect.
Which means the legal system recognizes the harm that was done, but the insurance system refuses to acknowledge the risk exposure. That gap between the two is where everything breaks down and creates the problem we have today.
Chapter 6. So who pays for the victim's damages when the insurance money runs out?
This is the part people really need to understand. When the insurance policy limits are exhausted and the carrier involved is basically judgment-proof, the unpaid damage costs don't simply disappear. They just move on further down the line to be paid by someone else.
Exactly. Medical bills tend to roll into Medicaid and Medicare. Disability programs absorb long-term care. Families involved lose income. Tax revenue disappears. And good carriers are forced to pay higher premiums to subsidize the bad carriers.
So even if you've never been in a truck crash, you're paying for them anyway. You're paying through various taxes, higher insurance rates, and lost productivity.
Everyone pays except the people who created the risk in the first place. That's the defining failure of this system.
Final chapter. What actually has to change with the way trucking companies go about being insured?
The fix isn't mysterious. What is needed is accurate risk underwriting by the insurance companies. This will serve to weed out the bad apples in the trucking industry and help get them off the highway. We also need real verification of trucking companies and real risk control done by people who actually understand trucking. Not generalists, not checklists. Professionals who know the difference between right and wrong and understand the decisions they make or don't make could get people killed out on the highway.
And minimum insurance limits that reflect modern reality. Coverage should scale with exposure and risk, just like workers' comp. And insurance companies who bind policies without verification should own the consequences.
Until insurers are forced to live with the risks they approve, nothing really changes. The tools exist, the data exists, the expertise exists. The only question is whether the market is willing to use them. Protect your load, protect your rig, and protect yourself. Leave us a comment below with your thoughts and ideas about this topic. If it's a good idea, we will share it with everyone. Subscribe for more trucking truth, and together we'll keep hammering this issue till somebody listens.
Well, my friends, keep the shiny side up and the rubber side down. We are trying to grow this channel to help truck drivers along with educating the general public. You can help us out by smashing that like button and the notification bell. Remember to subscribe and share this with another driver.